crude oil prices trace steep bullish breakouts beyond the bounds of over 2.5-year downtrending channels as tensions with the Iranian regime reach unprecedented heights, threatening the Strait of Hormuz and overall region. Hello everyone, this is Razan Hilal, market analyst with Forex.com, live from Dubai. Today is March 2nd, 2026. So analyzing WTI from a weekly time frame perspective, we can see a steep bullish breakout beyond the bounds of that downtrending channel since September 2023 with an opening gap as we had escalating tensions across the weekend when the markets were closed, targeting crude oil refineries across the Middle East and, of course, the Strait of Hormuz, which allows the passage of 20 to 30% of the world's oil and gas supply. So with that situation, we had potential supply risk disruption for crude oil flows, which raised crude oil prices back to highs last seen in June 2025, a month which had also an escalation for an Iranian war across the Middle East for over 12 days. So these prices aligning back with these highs, we can see potential resistance here near the 75 mark and the 79. A key close above 75 is expected to extend gains to 79, the previous June 2025 high, and the close above this level is expected to take crude oil prices above the 80 threshold for potential prolonged bullish breakout or structural shift, which can threaten overall rate expectations and inflation rates from a global perspective. Now, we did have also OPEC mentioning that they are willing to continue unwinding their supply starting from April, ending the 3-month halt. Yet, if we still have the risks of the supply across the region, especially for this supply to be able to be exported towards the globe through the Strait of Hormuz, then we can still be stuck in that same steep bullish situation. Now, from the downside, if we drop down to the daily time frame, or before dropping to the daily time frame, we can see that bullish gap here, where from a technical perspective, some traders can be looking at it for potential closing the gap, and that is below the 68, between the 69-60 mark and the 68 zone. Potential a corrective pattern can emerge should we have a clean hold below key levels over here identified on the 4-hour time frame. So a clean close back below the 71.80 mark can possibly extend losses down towards the 70-60 zone, and then further exposing it to that the opening gap area, which is between the 69.60 and 68. Now, these zones will remain potentially constructive from a bullish side should we close the gap and potentially sink deeper back towards the upper bound of that channel. We can be testing either another bullish rebound, reasserting that bullish breakout, or a potential breakdown within the bounds of this channel, possibly back below the 64.90 mark, reasserting bearish bias and redirecting the overall bullish scenario, removing it from the medium to long term forecasts. Now, with respect to the Brent chart, we can see a price surge beyond the highs seen in June 2025, reaching a new peak or peaking near the 82 mark, which were the highs seen in January 2025. Now, this is the initial resistance here. A clean close above the 82 mark is expected to extend gains for Brent all the way towards the 89 to the 90 zone, reaching previous highs last seen in April 2024. Now, this also would reassert longer-term bullish positioning across crude oil prices and potentially altering a global rate cut and inflationary expectations. Now, from the downside, should we have a clean close back below the highs of June 2025, so we'll be talking about the 78 mark, then we might have potential short-term corrective pattern on the horizon, possibly eyeing the 73.50 mark as an initial support, with the next key support zone and line between or near the 70 psychological barrier that can also either open the way for either a bullish rebound over the upper bound of that respected downtrending channel since 2023 and portraying the overall crude price action and expectations back within the 70 to the 60 price range.